Good morning, sports fans. It is Friday. What day is it? Is it the 5th? Yeah, it's the 5th. It's the 5th of December. You join myself and the awesome team from Alpha Picks. As always, I'm going to give them. Yeah, they honestly don't pay me to say this, but I will say it anyway. If you're not already following them, do so. They're brilliant. Alpha Picks on Twitter. Also, their Substack is phenomenal content, extremely good value for money. Maybe I am saying this because I want them to buy me a beer. Who knows? But as usual, me and the lads will be talking about the major themes of the week and, just our general vibe. Hopefully add a bit of value to your day, put a smile on your face maybe. Obviously, usual trigger warnings, etc., etc. Nothing discussed on the podcast is trading or investment advice. Nothing is endorsement unless it's endorsing PIQ or Alpha Picks, because then we'll do that all day long. And yeah, I think I've covered it. Guys, how are you?
Very slick, very slick.
Which is surprising considering the state
Yeah, I'm okay. I'm in one of those places where, when you kind of feel you're kind of like, you're just on the edge of like getting a cold. I've hit that dreaded. So I've got a buffer of about 48 hours to either jack myself up on vitamins, everything.
Or brandy.
I don't have a great track record on that.
This would be my go-to, Ryan. I think
right,
you have the same medicine.
Yeah, right. Come and see Dr. Paisley.
I'm sure your doctoring qualifications are very
well. I'm not feeling great, so I've got a cigar and a Bloody Mary. Follow me for more advice.
A Bloody Mary. That's probably even better. But anyway, we're cracking on.
That's where, back to why we're here.
Back to why we're here, because we have. What would I say? I'd probably say, we have I'd say 2 more weeks of proper price action. Next week, yes, big one. And then 2 weeks today, the 19th of December, is kind of the end of the road.
I think we did say last week as well, though, that, there's a serious case to be made for saying that we've already hit basically the end of the year. But yeah, you're right. In terms of proper trading days, not much left.
Yeah, I think obviously with the Fed meeting, next week, I think that's, people will still be wanting to see what happens there. But yeah, I think the vast, post Fed, I think that's when you start to see a lot of the big players sort of step away from things.
Yeah.
But still, lots of stories to talk about because earnings season is still in full flow, etc., etc.
Is it not finished by now?
Well, there are a couple of interesting ones I noted. I mean, the one I'd probably kick off with was American Eagle, which is the stock that we've been talking up a lot. I mean, we've owned because
obviously I'm giggling because I know what Jay's been posting every time there's a decent move. I'm assuming it's him.
Yeah, it is. Old Sydney Sweeney.
Yeah.
They blew it. They had great results, and they actually attributed. The CEO actually said that he referred to it as like decisive steps taken from the marketing team,
which is phenomenal language.
Great language. But yeah, I mean, essentially there was obviously the Sydney Sweeney campaign last quarter. Travis Kelce obviously had a brand awareness deal, and the two partnerships together generated 44 billion ad impressions, which is a lot. I mean, it's a lot, isn't it? It's a big number.
It's phenomenal. Like, I won't go into great detail because I'm not sure how much I can say, but a good friend of mine works for a company that paid Ronaldo, as in CR Ronaldo, not Fat Ronaldo, $7 million for one Instagram post, and they 10x'd the revenue on that investment, just for a bit of brand positioning. And it's phenomenal when you think about it. But then, and the Sydney Sweeney was case in point, right? It's like, sex, what I think as Jay said, tits sell.
Yeah.
The Don Draper moment. Tits.
I'm sure Jay will love that quote being attributed to him. Yeah. So, earnings per share, American Eagle jumped 10%. The stock is up close to 52-week highs. Still think there's lots of room to run there. Yeah. So that's that Don Draper style basket of like,
of course, I remember.
Back to basics jazz. And the other one sort of ties in with that. They didn't release earnings this week, but Nike unveiled a big sort of leadership shakeup. Like they're basically cutting their chief technology officer, chief commercial officer, and kind of like rejigging things again. And their big push, their big strategy flip is that they're going to focus less on like lifestyle sneakers and that sort of product and more on like athletics, sports people, and that sort of back to their root style.
Got you.
And I think and more broadly, I know these might be two fairly niche examples, but I do think there's a lot to be said heading into next year of owning these type of companies that are like really focusing on like rejigging strategies from what's not been working, rejigging now, and then seeing the benefits into 2026.
That's a great point, because now I kind of hadn't even thought about it, because I think it's such like a slow kind of organic kind of change what Nike made. But now thinking about it, they did kind of go into all types of like lifestyle clothing and all this like random stuff that was nothing related to basically like athletics and basketball trainers, which which is what they are. So are you looking to put the basket together for this then? And
so it's one we had out earlier this summer, and Nike and American Eagle were in it, along with like a Gap was another one. Their sort of denim campaign. But it's definitely like an actively managed basket, because this element of going viral or changing strategy, it can lose its steam quite quickly or not go well. So
and just on baskets, so I know our good friend Citrini. So he was doing that thing with like where you put your baskets up, and all these on there now, all of your stuff's on there, right?
Pretty much, yeah, pretty much all on there.
What's I'm sorry, I forgot what the name of the site
is. It's called Plutus. I don't actually know why that name specifically was chosen, but yeah. Jay, do you know what Plutus?
I've not heard that.
No.
It's a no from me.
I'm interested as well.
I'm sure there's some. Citrini's a clever guy. There's probably some.
Yeah, no, exactly.
Story behind it. But yeah, essentially, it's due to go live February, is the last I heard. At which point, the baskets that people can currently go on and look at and see their performance, they can actually then go on and link their account and actually invest in them.
So great concept.
It is. I think the way I kind of like thing is that eToro have that copy trading function, but obviously is quite restricted on products and whatever.
And also, you're copy trading punters, basically.
You are. Yes. Yes. I didn't want to put it so bluntly, but yeah, eToro has a certain sort of style, isn't it?
Yeah. It's the highbrow version. But no, I genuinely think it's a great concept. And, without blowing smoke up your ass, which I will do anyway, because I'll fancy a beer out of you at some point. We talk about the baskets you guys put together, and anyone that's following the Substack, which again, everyone should be, you put out some great pieces and stuff, and they're always linking to a basket of stocks. Now you can actually follow along in real time. And like you said, also just follow them in, basically.
And it's very transparent, you know what I mean? It's like if you see a basket underperforming, you don't have to put your money in it. And if you know what I mean? Like it's very, you live and die by the sword. So, people
can
see. Yeah, for sure. So anyway, that on a slight tangent, but the owners are good on that. But what I wanted to get your opinion on, Ryan, is MicroStrategy at the beginning of the week. Well, actually, just strategy now, isn't it?
I'm not going to say I told
and a bad strategy at that.
Name change. I'm not going to say that I told you so, but I think I called this about 6 months ago.
Yeah. So in the latest news this week, they obviously sold common stock to get a 1.4 billion cash reserve fund. They say it's obviously just to help pay out dividends and shore up the cash flow and all this type of thing. They've obviously still been adding to their Bitcoin holdings last week and this week. And I was saying to Jay, actually, I tell you what, Jay, do you want to go on first in terms of thoughts on this?
Yeah, I kind of wrote a note Tuesday night and put it out on Wednesday. There's definitely a few different angles with strategy, and I'm pretty sure a lot of these points we've probably spoken about a lot this year. But to start the year, they kind of had this premium that they could command because they were the only company doing this, and access to Bitcoin was apparently hard to get. But now as we come to the rest of the year, I think there's about 140 odd Bitcoin treasury companies now.
Yeah, it was definitely at the start of the summer we were speaking about this, and we said the first one that had the first... Yeah, sorry, someone's just shouting at me whilst I'm having me drink. But we said at the start, it was definitely the start of summer, because I remember pacing up and down the cobbles in the Stafford, that as soon as the gates open and there's more of these firms, the wheels are going to come off, and that is exactly what has happened. So we don't get to pat ourselves on the back much, especially not when we're talking about Deliveroo IPOs and stuff.
Yeah, they kind of faltered because of their own success. Because because they did so well and they got so much traction earlier this year, everyone's gone and copied them, which has then meant they can't command the premium.
But also, not just
And then
copy, and we have mentioned this in the past. Well, again, I think, Jay, me and you were talking about it. It wasn't just copying, but they basically made their competitors provided better products and better ways to market, better entry to the market. So they're fucked on both senses. It's like there's more competitors, but also they're all better.
Yeah. I also think it was a really interesting...
Michael, if you're listening.
An interesting thing with Strategy and Bitcoin. I think they own about 3% of circulation now. But if you look at that, there's like the Strategy tracker or Sailor tracker, whatever it's called, and it shows all of the purchases that they've made. So much of the volume on these like big up rallies on Bitcoin has been them. Strategy. Yeah. And now we're hearing that they don't even have cash to pay dividends, so they're raising cash. So they're not going to step in to be the backstop of any crypto sell-off now. So I'm very interested to see where Bitcoin stabilize.
Well, this is the thing, right? God forbid, if you are invested into Strategy, or even if you're just long Bitcoin, God forbid they need to start liquidating. Because it's all right for Sailor to say, "Oh, we'd never do that," but we'll see. But because like you said, they are the market. What I would love is, there's like the Sailor tracker where it puts the orange dots on when he buys. Someone should call up a USD chart and put a big orange dot where he bought, where they started up the USD reserves.
That's a very good idea, actually.
There you go. You can have that one.
There you go. Yeah. I mean, the thing I thought was interesting as well in as part of the statement they put out was that they've revised, because pretty much intrinsically their finances as a business, a lot of it in terms of their forecasting and what they project they're going to make depends on where they think the Bitcoin price is going to be. And previously, I didn't realize they'd set their company expectations for $150,000 Bitcoin price at year end, which obviously now they've revised lower to 85 to 100K. But it's like, that's like almost 40%, revision lower. And so obviously their finances have been revised lower. But I find it strange that, obviously for other companies, like a BP or a Shell.
Oh my God, can you imagine?
The oil price predictions they use, they factor into their forecast, and that kind of makes sense. But they're not sitting there being like, what if we plug in for like year end oil? Let's put crude at like $200.
Spin the wheel.
It's like it'd be laughable. And yet, obviously, with Strategy, they seem to be able to get away with being like, let's price our fundamental business off a Bitcoin year-end price of 150,000.
Right, exactly.
And it's like,
I would love to know the makeup. Maybe you can find it on Bloomberg. I don't know, the makeup of the biggest shareholders of Strategy, because in my eyes, no serious money would be involved in that. It's basically just a cult of Bitcoin. But like it baffles me, anyone with a serious company or serious desk or whatever investing into Strategy. In fact, if we can find out who has got a significant equity in Strategy, they're potentially a decent short. Do you know what I mean?
It's true. Yeah, I think I struggle to know how you actually do, because I think a lot of the MSCI holdings would probably be packaged up in some kind of ETFs,
right?
Then packaged up as the holders are like a BlackRock or a Morgan Stanley. Just have a look there. But it's a valid point. But anyways, Strategy definitely one to keep an eye on. And also, the last thing I'll say on this is, do you not think raising funds for cash reserves, which they would have done to be like, it's a sign to the market that they'll really appreciate that, actually is the opposite, where you're like,
massively.
They're raising cash. That's actually not a great sign, right?
It's a huge red flag. Huge. You're definitely not the only one. I'm glad you said it, because I'm sitting there thinking, am I the only one thinking that this is a really bad sign?
Yeah, no.
You're sitting in your cabin on the Titanic and your feet start getting wet.
So we're just having a bath. It's just nothing to worry about here. Then actually looking ahead, one part behind, one part ahead, labour market and the Fed meeting next week. So obviously private payrolls data, which I think has been one of your favourite recent
ADP.
Sort of ADP. That's you, isn't it?
It is me. It is me.
That's you.
Largest drop. Massive.
Largest drop in 2.5 years for the latest November print. And obviously pricing at the minute is a 95% probability that the Fed cut rates next week. So Brian, the floor is yours. What are we saying on ADP? We think it is very worrying signs.
Firstly, I will say shout out to ADP. They're definitely the the smart money employment gauge rather than that bullshit BLS report. That's what the BLS stands for, bullshit. You know, jokes aside, though, it's definitely it's the one to follow, and I'm saying it's definitely because Michael Brown is listening and he hates the fact that I love ADP. But in terms of
Get him to sponsor the pod.
oh, that's not a bad shout. Oh, I'd love that. Do you know what? Just out of spite, I want them to sponsor the Morning Blast. No, but what's my opinion on it? To be honest, I think because of the government shutdowns and you follow through into private sector and stuff like that, I think it's just going to be messy data regardless. I'm keen to hear your thoughts on whether or not how much it's going to move the dial in terms of Fed policy, given that we've got a new Fed chair on the horizon. It almost feels like we're in that kind of like purgatory at the moment, where holding pattern, where the data could be anything, and nothing's going to really matter until we've got this, the new year comes now.
Yeah, I think the interesting point I took from it was that it was the split between sort of large businesses and small businesses. So it's like large businesses, which I believe is if you employ more than 50 people, or might be 100 people, either 50 or 100. Large businesses actually reported net gain of workers for November, but it was small businesses that essentially had a huge loss, and that's what obviously skewed everything lower. So I think actually it's more telling, and the Fed are probably going to be more worried that the small enterprises are really struggling, which you could say is, the domestic view. It's
the difference between like Wall Street and Main Street, right? It's this is like the real economy, you could argue, is the smaller shop, manufacturing kind of companies, domestic shop, all these different things. It's a great headline when Citibank or whoever lay off 500 workers or 1,000 workers, or Salesforce dropped 30,000 workers. Yes, it's a big deal, but it's like one off. You know what I mean? And they're huge companies, and also these are highly skilled people. People like your people in the banking sector, and then Salesforce and all these other shops. Whereas if the employment's if the arse is falling out the employment market for your general middle of the road people, that's a lot of people now going on to benefits and welfare and something. It all follows through. So no, I make you right. I think this is it's kind of flown under the radar slightly, but I definitely make you right in terms of people should be paying much more attention to what is going on in the smaller operations.
For sure. Yeah. So I think, the takeaway, I agree that for the Fed, like, it is noisy data. You've got all these heavy caveats. But I think the report that comes through, I think if a lot of the members who are already thinking, I'm going to have a lead towards a cut, I'd struggle to see any data we've seen since the reopening that, in my mind, is like, actually, do you know what? Maybe we shouldn't cut in December.
Oh, no, absolutely. Exactly. Yeah. So like the TLDR is, if anyone that's on the fence will probably, most likely now lean into cut.
Yes.
Do you know what I mean? There's been no data or nothing coming out that would say, actually, no, do you know what? I'm right to sit on the fence now. Everything, as you said, everything we've seen is more leaning to cutting, which, and hopefully get that Santa rally. Well, no, has anyone mentioned the Santa rally this year? I've not seen anyone mention it.
Well, not yet, but I actually thought we saw quite an early indication of that with that ADP print, when since obviously large cap equities down sharply, and then by the end of the day, all of those losses had been made back. And I thought that was an early sign of how keen the market is to be buying a dip. And although, like, when you look at the S&P, I still think we do sort of range trade through to year end, is that I've been actually pretty impressed that there has been quite a solid undertone of a bid over the past week or so.
Yeah, well, obviously I'm permanently bullish, but we'll see what happens. What's your thoughts? What's your thoughts on like going into the year end and New Year and Christmas markets?
Is that me, Ryan?
Yeah.
So we've kind of had this fairly inline consensus between the three of us that equities were kind of ranging since that Trump China sell-off in October, and we're still kind of within that range, but on the upper side of the range. I think because of the volatility in November and a big rally to end the month, I do think we're probably not going to see, like this week, for example, like price action's fairly flat. There's not been too much, even with some of the data. So we're probably not going to have too much movement into year end. I struggle to see a new high before the year's out. The points were made before that no one's going to really be putting on new longs, and no one's going to really.
No, that's fair.
Or I think everyone's just going to start making those calls in January, after we get the Fed meeting done next week. I think it's kind of.
And that's a valid point, right? This has to be clear. Like, equities have had a phenomenal year. When we look at it, we then take a step to zoom out. So potentially, and we know there's a lot of money off the table at the moment as well. Yeah, so save your money now, see it go sideways, and then all in January.
Yeah, and it's the correct me if I'm wrong. We've got the dot plot.
Yeah, I think so.
Meeting, won't it? So there's a potential that there's maybe some new information there. Obviously, the cut is now fairly priced, and the Fed aren't going to shock markets.
No,
they would have been talking a lot more if they weren't.
Yeah, exactly. And this is the thing. They, credit where it's due. They are very, very good at communicating to the market. I can't remember the last time we had a shock from the Fed.
It's probably September last year, wasn't it, with the 25 or 50? I think that was the last meeting I can recall that.
Yeah, good shout. And Michael Brown's probably now scrolling through and working out when the last one was.
Agreed. A couple of last little ones I wanted to throw out there. We were chatting it wasn't last Friday, the Friday before, OpenAI IPO.
OpenAI?
Yeah.
Easy
Open
for you
your
to
eyes. Open your eyes. This week, the FT reported on Wednesday, Anthropic are now looking to basically greenlight an IPO early next year.
Yeah.
And they recently raised funds at a 350 billion valuation. So, logically, you can sort of put it in that ballpark. And and the interesting angle I had on this, which really I want to mention it, is that all of a sudden into Q1, Q2 next year, I think you could start to see, we're already seeing an AI race, but do you start seeing AI IPO race from like Anthropic, from OpenAI, from basically all these sort of high techy, we're cool and private, doing our private funding raises? Because you got to think about it. If you just take OpenAI versus Anthropic, whoever goes public first gets that buzz, gets that media attention, gets the capital injection, and all of a sudden, like, even if nothing changes, whoever has that first mover advantage in the public markets.
Do you not? And the thing is, if it's OpenAI, the thing is, there's a lot of people now that kind of starting to kind of increasingly doubt, Sam's
First name,
say, by floating, you give short sellers the opportunity to wade in. I see what you're saying, like, first mover advantage potentially, but also it could be a phenomenal backfire. I mean, and like, how depressing would it be, or how bad would it be for the market if we game this out? Say OpenAI is pinned at, to IPO at, it's round numbers, 100, right? And then they actually IPO at 100, and in the first day it comes off 25%. Just theoretically. Now that is going to send massive shockwaves through the market because of all of the, how much froth is in the market based on AI spending, etc.
It's true. It's true. It's a blessing or a curse. So if you're Anthropic, you'd sit on your hands.
Yeah, exactly.
Yeah.
I almost, you almost don't want, OpenAI to IPO, because it would be like the tide going out and you'll see who's swimming around naked. Like, I'd rather just, what was it? Ignorance is bliss.
Yeah. Okay, fine. Yeah, no, fair play.
Yeah. You see what I'm saying, right?
Yeah. And then the last one I wanted to, again, the sort of unrelated last one, you probably saw it. I'm talking about, relative levels of wealth. Michael Dell and his lovely wife.
Oh, you bastard.
6.25 billion he's contributing for the Trump
him and his lovely wife
investment accounts. Yeah. And I think it's, it's not a bad idea. It's not a bad idea, is it?
Right. I'm with you. I think it's a great idea. Because, why not? A kid, it's, I don't know the details, but I'm assuming it was, $250, whatever. They can't touch it until they're like 18 or whatever, and everyone's involved in the stock market. Everyone's cheering the same thing. I like we won't go into much detail about his lovely wife, but
yeah, I mean, I get it as well, because, it looks like the government's obviously going to chip in a bit as well. You've got, I think, like $1,000 federal contribution, $250 from Dell, and, there's rumors other people might be chipping in as well. And so it's like, in theory, imagine this gets to like $2,000, $3,000, $4,000, and you basically put it in the S&P tracker or, whatever you want for your kid, and then it gets to 18.
Yeah.
I mean, like, I'm not saying it's going to be like a material move to the market. I'd be interested to know what the impact of that sum of whatever it turns out to be, 30, 40 billion would have on it.
More passive flows, right? We've spoken about passive flows in the past.
But it brings that sentiment, as you said, of like cheering on the stock market.
Yeah, well, it's
that's
like
what all
basically
this money is going to be put into.
everyone rallying around the crap stable, cheering the same dice.
Yeah,
I like it.
Yeah,
that's the degenerate take, obviously.
Yeah, I mean, I'd love to know how many parents will take that money out and do whatever, but I don't think they can. But I think it's an interesting idea, on one that, like, on the face of it, could you just say like, oh, you can't like just give everyone free money? But
well,
I think Rachel Reeves would probably, if she's listening.
Hey, Rach.
Hey, Rach. I think if you want to get people involved in the stock market and you want to get people cheering it on, and you've got big philanthropists like Dell knocking around, I think it's not a bad idea.
I do wonder if this will make. Sorry if it's getting a bit loud. I do wonder if this will encourage people to have more kids.
Yeah, or encourage people to buy Dell stock, right? Like if you're,
not if he's giving away all his money.
Yeah. So on that was a nice little tip.
Well, actually, do you know what? That's a good thing to do. If a billionaire kind of owner of a company would do similar, he could just say, look, for every kid gets a share in my company. Yeah, and then everyone's going to be cheering the same company. And I'm going to say, if anyone does that, then literally just wade into that company, because then everyone's going to be doing the best for it. No, but I really rate the concept.
Yeah, agreed. Cool. Well, that was it from my side for this week. Unless anyone else spotted interesting stories.
No, I think you've covered everything for me. Jay, anything from you?
No, I think nicely covered.
Nice. But look, you can have that tweet that I mentioned to you before. I'll repost that when you get around to it. The Michael Saylor where he bought dollar. But guys, absolute pleasure as always. Again, I can't stress enough to everyone, subscribe to their Substack, etc., etc. Not only are they nice guys, but they put out phenomenal content, extremely valuable. But pleasure as always, lads. Whatever you're doing, listeners, have a